Hey everyone! In today's video, we're diving into a bold prediction NIO stock has the potential to double by the end of 2025. But the journey to that milestone won't be smooth, and there may be one last major dip before the big rally begins. So, what's driving this expected surge? What risks should investors watch out for? Stay tuned as we break down the key factors, upcoming catalysts, and market trends shaping NIO's future. Let's get started. I'm highly confident that NIO stock has the potential to double by the conclusion of 2025. However, the journey to that milestone could be somewhat turbulent as we progress through this year. In this discussion, I'll highlight the reasons why I strongly believe in this growth trajectory, along with the factors that could contribute to one last significant dip before the rally begins. As always, this is not financial advice, this is merely an analysis based on data and market trends. So, what makes me so certain that NIO stock will experience a substantial surge? The key lies in the latter half of this year. With the launch of the ONVO L70, as well as the introduction of the updated NIO 3.0 and NIO 2.5 models, we are likely to see a significant uptick in sales figures. NIO has already set an ambitious goal of doubling its sales in 2024, with most of that growth expected to materialize in the second half of the year. The arrival of these refreshed vehicle models will be a game changer, as the current lineup, while still competitive, is starting to feel slightly dated in comparison. Among the upcoming releases, the L70 and L60 will take center stage, alongside new iterations of the ES7, ES8, ET5, and ET5T, all of which will be built on the NT 2.5 platform. These models will incorporate horizontal screens and NIO's proprietary processor chip, which is a strategic move that will reduce reliance on Nvidia and ultimately improve profit margins. If you recently tuned into NIO's latest press conference, you may have noticed the absence of NIO's logo among its automotive partners. This omission suggests that NIO is making significant progress in developing its own chips, a crucial step toward improving profitability. Speaking of financial performance, NIO has set a target to achieve profitability by 2026, and I firmly believe they are on track to meet that goal. The company's cash burn rate is expected to decline steadily throughout this year, leading up to a much healthier financial position as we enter 2026. My expectation is that by the end of 2024, NIO stock will have doubled in value from where it currently stands. My conservative price target for the end of the year is approximately $10 per share. Now, while the longer-term outlook appears promising, the path to reaching that $10 target may not be smooth. I anticipate one final dip before the recovery begins, primarily due to balance sheet concerns. In its Q3 2024 earnings report, NIO disclosed approximately $8.1 billion in current liabilities. For those unfamiliar with the term, current liabilities refer to financial obligations that must be settled within a fiscal year. This includes payments to suppliers, outstanding bonds, and other short-term financial commitments. Currently, NIO has around $6 billion in cash reserves. However, considering the company's quarterly cash burn rate of about $700 million as reported in Q3, this figure will likely drop to approximately $5.3 billion by the beginning of 2025. Given the looming $8.1 billion in liabilities, NIO may need to secure additional funding. While some may worry about the possibility of share dilution, I believe that issuing more shares at these current stock price levels would be counterproductive and severely impact investor confidence. Instead, the more likely scenario is that NIO will seek external funding, possibly from entities like Abu Dhabi's CYVN or other strategic investors. Some analysts speculate that NIO's strong Q4 sales performance may have been strategically timed to paint an appealing picture for potential investors. In addition to the core NIO brand, the company's expansion into sub-brands like Firefly and ONVO also strengthens its case for securing additional capital. Most likely, NIO will raise funds via a convertible note offering to extend its financial runway and manage its liabilities. A capital infusion of this nature is almost inevitable. The only question is at what cost. We should get more clarity on this soon. Another factor to consider is the technical side of stock movements. Historically, NIO stock has followed certain price gaps. When NIO was trading at $60, I pointed out that there was a gap at $22, and although many dismissed the possibility, the stock eventually filled that gap. The same pattern repeated when I identified gaps at $13 and $8, both of which were later filled. The next identified gap was at $5, and once again, the stock moved to that level. Now, there is an existing gap at $2.55. I want to be very clear, I am not predicting that NIO stock will fall to this level, nor do I want it to. However, the gap is there, and market history has shown that these gaps tend to get filled. If NIO were to drop to that level, it would present an incredible buying opportunity, offering a potential 4x return by the end of 2024 if my $10 price target is reached. That said, I truly hope we don't see the stock decline that much. Whether or not this gap is filled remains to be seen, but it is important to acknowledge its presence. Looking at the broader timeline, the most bullish momentum is expected in the latter half of the year. On the other hand, any potential dip would likely occur in the earlier half, before the launch of the new models. Additionally, how the market perceives any new fundraising initiatives will play a crucial role. If the market reacts positively to additional capital being raised, it could actually serve as a catalyst for the stock rather than a setback. It's worth noting that Tesla has repeatedly raised capital through stock offerings and been met with a bullish reaction, whereas, for some reason, similar moves by NIO tend to trigger negative sentiment. Ultimately, we need to wait and see how the market reacts to any upcoming fundraising or dilution efforts. A final dip remains a possibility, but is not guaranteed. My confidence remains firm in NIO reaching $10 per share by the end of this year, contingent on the company achieving its ambitious sales doubling goal. The first half of the year could see some downward movement, but once the new models roll out and demand accelerates, we should see a strong rebound heading into 2026. If profitability is achieved as planned, NIO will likely trade in double-digit territory permanently, with even greater upside potential in the years to come. For the long term, my ultra-bullish price target stands at $650 per share. But for now, we must closely monitor NIO's financial positioning, particularly its $8.1 billion in liabilities, as this remains a key factor in determining the stock's short-term movement. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.